I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen. His website is thegoldandOilGuy.com. Welcome back to the show, Chris.
Hey, thanks for having me, Jim.
We've been taking a look at the stock markets in Canada and the U.S. the last couple of weeks. Record highs keep being set by the TSX and the Dow. And you also had some numbers for the S&P you were looking for, and how successful was that search?
Right, yeah. Well, we're seeing some pretty extreme optimism and complacency in the stock market, which is got everybody feeling really good. The Dow hitting new highs, breaking 20,000. The TSX breaking to new highs. It feels that right there is like a very positive feeling for investors around the world, because they feel as though their accounts are going to be making new highs and their accounts are growing, which in most cases they are. Maybe not making new highs, but just the way people's portfolios are created. But it's a very, very positive thing that's happening right now, and we can see that in a bunch of different kind of sectors and sentiment indicators. But, back in January, I talked about how the SP 500 was set to make a 3% move within the next month. And yesterday, we actually hit that 3% move to the upside. And today, we're actually just kind of starting to squeeze above that. And what that 3% move was, or is simply, it's a time cycle, and it's also a measured move based on the momentum of the market. And usually when the market runs a certain amount of distance away from a certain kind of support zone within a certain period of time, the market will tend to stall out and see a little bit of protective money kind of move into the safer havens. And so we're at a point now where the market's had a nice run, it's hit a target, and I think we're going to see maybe a little bit of weakness over the next couple of days, but really all it is a short-term kind of move in the market. And, right now we're seeing financials are fueling this move. The XLF is up nicely, breaking out of a big pattern. It's been on a tear for about a week, and same with technology stocks. And they're the ones who have been doing all the heavy lifting at this point for the last about a month. Now, there are some really interesting sectors, I think, that have bottomed, or bottoming, I think, as of today, some of them. And there's going to be some new hot sectors that are going to carry a lot of the weight for the next kind of move up here in the equities market, which we can talk about, which is the energy sector stocks. And, natural gas is actually setting up for a very significant bottom. It's at an inflection point today. So there's going to be some new sectors, I think, rotating in favor as potentially the financials and tech start to kind of take a breather. I think there's going to be that upward momentum carried by some fresh new sectors that have already started to make a move. And with natural gas, I think, on the verge of starting to bottom here, which will help fuel the energy sector.
What sectors do you think are going to take over?
Well, if we look at the energy sector, we have a multi-month consolidation, and it's been really consolidating. It topped out in mid-December. We've seen the XLE ETF, which is the energy sector, kind of fading down, and it put in a kind of a panic washout low last week on the 8th. And it's had a nice strong rebound. It's got a very bullish price action forming. And the last time we saw a pattern in a cycle bottom like this for the energy sector, we saw a very significant move. We saw about a month and a half long rally, and we're looking at 20% move to the upside. So we've only seen about a 4% bounce at this point. So there's a lot more upside potential. And I think we're on the verge of breaking out another day or so, I think, for the energy sector, and it'll actually clear some resistance, and I think it'll be off to the races. And I think a lot of that has to do with kind of the underlying commodities. If we take a look at, let's touch on crude oil real quick. Crude oil has been building this multi-month base since mid-December. It's been flatlining, building up a lot of energy. We're seeing a lot of buying volume come in. When crude oil breaks to the upside above that 54, 55 per barrel level and closes up there on a weekly basis, I think we are off to the races with crude oil, and we could see 60, 62 get hit on the crude oil price. And right now we're at 53, so there's quite a bit of upside potential for crude oil. And if we look at natural gas I've been watching, we've got a nice three-wave correction. It's been unfolding more or less since December 28th when it topped out. It's had a nice ABC or a three-wave correction down to the 200-day moving average. We've had more or less, looks like capitulation type of selling where everybody's just finally giving up on natural gas. It's got a series of lower highs, lower lows, increased volume, but prices come down. It's filled a price gap from in November. It's at the 200-day moving average. Volume and price action is indicative of a bottom getting formed here. So it looks as though natural gas and crude oil are on the verge of having a big run. And with the XLE or the leveraged energy sector stocks like the ERX ETF, which is a 3 times leverage, there's massive upside potential that I think could take place, imminently here going forward in that sector.
And we've, gotten through December with prices in the 50s. Usually in December, that's when we see the lowest prices for oil. December, January, we're past that point. So is upward the natural trend anyway?
It is, yeah. We're going into a season where, we're going to start to see everybody's getting geared up for spring. It hasn't been the coldest winter, and it feels like we haven't even had a full winter yet. Typically, where I am here, just north of Toronto, this time of year, it feels like we're in the middle of winter, and spring is never coming. Well, this winter has not been like that by any means. We had grass up to about a week and a half ago still, and we have a nice warm breeze out there again today. It feels like spring is constantly just around the corner. So, I think there's going to be a lot of potential driving, a lot of trips this year. I think people are gearing up, and traders kind of already feeling that urge that, it could actually help crude oil prices because it's going to psychologically get people thinking about crude oil prices going forward and the demand. So, I think there's a lot going forward, even for natural gas, same type of thing, that we're going to see a big move to the upside.
We'll have more with Chris Vermeulen right after the break.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the 4th largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, are people nervous that the U.S. Fed is talking rate hikes again?
I'm not sure if it depends on who you consider fearful, because you've obviously, you've got different sides of that. But, I do feel as though kind of people are fearful of it. Obviously, it has a drastic effect on real estate, mortgage pricing. Cost of living is going to go up dramatically every time the Fed raises rates. So, yeah, there's definitely a lot of fear, and eventually, typically what happens after a multi-year bull market in equities, eventually the Fed or the rates start to climb, and there's usually a delay, potentially half a year or so delay in rates after rates have started to go up, that the equities market usually tops out. And I think we touched on that in our last interview here, talking about how I think June, July is when we could see the equities market top out. But until then, I think the market is going to keep running and it's going to be hot. But there is a lot of fear with interest rates, I think, continuing to go up, potentially another quarter basis points or two in the near future.
In the U.S. as well, Trump is talking about tax cuts, especially for corporations, and reducing banking regulations. Apparently, he's taken away the fiduciary duty rules that Obama had put in. Should that make investors there nervous?
Yeah, potentially. Obviously you remove some rules, it definitely opens it up for the banks to kind of get away with things maybe they should be a little more responsible for. I heard rumors that there's potentially some of the big financial firms who are holding money in money market funds. I heard that there's chatter going on that they are going to be forced to put the investors' money into bonds while they're sitting idle. No more money market funds, which means that it could create a big trigger of bond buying. And secretly, or people don't realize it, but what it's doing is putting all that free money the Fed is printing and selling bonds, he's putting all that stuff, all that money, capital, they're moving it into the average investor. So they're getting it off their books and putting it in the holder of the U.S. citizens. And, I don't know if that's going to come true or not, but I've heard chatter that is going to start to happen, and it's going to be a pretty shady way for the U.S. to shift all their debt right back onto the average individual. They'll think that the banks or the funds are, doing them a good thing, looking out, but they're going to be forced to put them into bonds. And, if anything severe ever happens, you can lose a lot of money being all in bonds. But, in the interim, if they're forced to start moving money to bonds, we're going to see bond prices start to, probably hold up and do fairly well.
Is that connected at all to the European market where they're still worried about the Italian and Greek banks?
Yeah, I'm not sure if it is or not, to be honest. I'm not sure.
With American banks, again, being deregulated, a lot of people are worried, like you said, that the average person might get caught up again. And of course, if the banks are caught doing anything wrong, they pay a minor fine compared to their profits. Carry on while you lose your house.
Oh, I know. Yeah, it's ridiculous. And, ever since Trump got in, the financial sector has exploded to the upside. And, of course, it's leading the way higher again in the last week and a half here, breaking to new highs. So, obviously, the deregulation, it obviously is very bullish for banks. They can probably get away with murder again and start to do risky things to try and make as much money as they can, because really they have nothing to worry about. The Fed will bail them out. So they're going to, go back to their shady kind of things that they liked or did in the past.
What's your feeling after the meeting between Prime Minister Trudeau and President Trump? I mean, one of the things Trump said, he said Canada is not the problem that Mexico is with U.S. trade. He says we'll tweak NAFTA, but he really did give the impression that he wasn't going to mess around very much with Canada-U.S. trade because he's happy with the numbers.
Yeah, and why should he be upset, really? We're pretty easy to go with. We're the only country that says we're sorry for saying sorry too much, right?
What do you see in other sectors like lithium?
Lithium's been a hot commodity, and that is, I think it's going to be a big growing demand and a big opportunity to the upside. It's had tremendous growth. There's some pretty hot new lithium plays out there. I don't really want to name any, but man, there's some incredible plays, new technology on how to get lithium out of wastewater. And, I think there's big potential because we're getting into these battery systems in cars, and there's the aviation industry is starting to look into these batteries as well. So, there's massive demand, and there could be, there's not a whole lot of supply, so the price is rocketing higher. And, the world is moving to electricity more and more and in storage. So, big potential, I think, in lithium.
And of course, in big cities like Beijing, pollution is such a problem, they need to find ways to get the air cleaner. Yeah,
for sure. It's tough to beat electric cars with how they run, and it comes down to how do you get the energy without producing a lot of waste to create the energy. But man, are the vehicles and the emissions from them, they're on their own very beneficial for the economy.
And the price of electrics, too, coming down to the point, I hear that in 5 years they'll be comparable with the average gasoline-powered car.
Yeah, I can see that. We're really just kind of in that. Well, we already had that initial big wave with people starting to embrace, Tesla, electric hybrid cars, and now we're at the point where they're accepted. Everybody's starting to kind of want one, or somebody who could use one who doesn't do long distance driving. It really does make a lot of sense, and I think there's going to be increase. The demand continues to pick up at a fast pace, and of course you need economy of the scale. You need to get a lot of people involved before the prices really drop. So I could see in 5 years prices being affordable. There'll be versions, at the price of a typical ICE car, internal combustion engine.
I know there's that concern about rangeability with an electric vehicle, but one of our regular guests, Hilliard Macbeth, has a Tesla, and he says the computer on board lets you know what your charge is at every moment and where the nearest recharging station is, so you never do run out of power because it lets you know it's time to run away to the nearest charging station. And it shows you where it is.
Yeah, that's a great feature. And really, you need it. When you do have limited fuel, you know how it is when you get to a quarter tank and you're going somewhere across country or anywhere. You start to see these gas stations fly by and you're like, maybe I should have stopped there. So if you have a limited amount of fuel or energy to get to where you're going, you definitely need something like that. And of course, there's going to be more and more stations every year popping up. So before you know it, it won't be really a big deal. And stopping for a break, it's good. Some people may see it as a big hassle, but there's going to be a group of people who embrace that. I need to stop. I'm going to charge up. I'm going to stretch my legs. I'm going to make some business phone calls or do whatever while I charge and then go back at it. Stopping to fill up with energy or re-energize isn't always a bad thing. It's just you have to learn to embrace some of that downtime. And, you can do a lot of work from your cell phone with phone calls or wireless, all that stuff now. So it's not the end of the world. And I think that's going to be seen more as the norm, that you'll be talking to people and they'll be like, oh, yeah, I'm just charging my car. I thought I'd just call you.
Well, of course, you can do it at home overnight. So if they do have charges based on what time of day you're using your power, if you're recharging your car overnight, you're going to be recharging at the lowest rate. Chris, thank you so much for chatting with us.
Always a pleasure, Jim. Thanks for having me on the show.
My guest has been Chris Vermeulen, his website, thegoldandoilguy.com. You're listening to HowStreet.com radio. Find us on Twitter on Talk Digital Net. Questions for the show can be sent to info@HowStreet.com. Our popular YouTube channel is Talk Digital Network. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.